Hey guys, Gerry here from the DeFi Alpha Gaming Guild. Got a video on LOOKS and my thoughts on how it's going to compete with OpenSea, the main NFT marketplace. So let's get into it. LOOKS about 3 days ago did a big airdrop, and they're trying to do basically a vampire attack, which basically steals the liquidity or the users from another protocol. So they're trying to take on OpenSea. It seems to be the first serious attempt at competing with the behemoth that is OpenSea. For those of you who don't know, OpenSea just raised, I think it was a $13 billion valuation. I can find the right tab. Here it is. At the start of the year. So they've been massive, and they've been pulling in huge amounts of transaction volume. But they're doing a very Web 2 thing and not sharing that wealth that they're generating with their users. So they've been raising money from VCs. This is their Series C round. And it sounds very much like that they're probably going to do an IPO on the stock market, similar to, say, like Coinbase. And it's not a very Web 3 way of doing things, and it's not really rewarding their loyal customers. All it's really doing is extracting value out of them. So I can see a decentralized competitor doing quite well if they get a few of the fundamental things correct. So one of the things that LOOKS is doing, as you can see here, 100% of the fees from OpenSea just go back into the OpenSea's coffers, but 100% of the trading fees on LOOKS gets returned to people who are staking their LOOKS tokens. So straight away, there's mutual incentive there to use the platform and be rewarded in doing so, and locking up your tokens, which takes it out of the circulating supply. So the other thing that they're doing is competing with OpenSea directly on fees. You're charging less, so it's more money in your pocket when you're trading on LOOKS just from the fact that there's they're less extractive. So that's another good selling point. Another thing that they've done they had a private sale, and this is the contract for the private sale, and you can see quite a few doxed wallets of some main players here, predominant NFT collectors. So as long as these guys act in good faith to the community, there's a good chance that they're going to pump their own bags and promote this. So one thing to keep in mind is they got in obviously at a really good price, and I think it was between sort of 10 and 15 cents per token, depending on the ETH price at the time. So they've gotten in early. They've got big bags of this stuff, and their tokens do vest and become tradable after about 180 days. So something to be just mindful of. If these guys decide to just dump on the market, there'll be a lot of sell pressure. And if they do that'd be overall bearish for the protocol, in my opinion, because it means that these guys don't see this being long term. But I have a feeling it's probably going to go the other way. And I feel like so far, they are pumping it up on Twitter and whatnot, and the proof's going to be in the pudding. But in the meantime, that they're making a bucket load of cash by staking their own LOOKS tokens. They can stake them already, even though they can't sell them. So they're getting a huge percentage return there. Just having a quick look at some of the tweets around it. So Mooncat here went pretty big. What 55 ETH worth when it was at $1.90. So basically timed the exact bottom and pumped it up from there. So he's got a good tweet thread on why. If you have a look at the price, most airdrops, this isn't the full chart. It's missing the first few hours of data, but it started at around about, I think, $4.50 and dumped straight down to around $2, bounced down around there, and that's where that 55 ETH bid got filled in around here. And you can see it's been a slow grind up, which that's really impressive for a big airdropped token. The fact that it's grinding higher is super bullish, if you ask me. Had an all-time high last night. Has pulled back a bit with the rest of the market, but this is pretty encouraging that the price is going up, and it's probably in part that there's a lot of people staking. So be able to look at some of the Dune Analytics dashboards. This is on the actual airdrop itself. 73%'s been claimed already, so there's probably not too much sell pressure coming from new people claiming and dumping. Only 55% of addresses have claimed, which says to me that a big percentage of the remaining is held by a lot of small wallets, which makes sense because the smaller your wallet, the smaller your airdrop, the more it costs you in gas to come and collect. And you can see gas is pretty high. It's been quite high for quite some time. So a lot of this doesn't make economic sense to claim your tokens while the gas is high. So there's a 10-day window to claim as well. So we've got about a week left of that. This is showing more the actual volumes and usage. It's had some ridiculous volumes. So that's OpenSea in the blue, and you can see how it's being dwarfed by LOOKS Rare. But the main reason for that is wash trading. So because you're incentivized to trade and quite heavily in the first month, there's a lot of people trading the same NFT back and forth between two of their own wallets, especially those that don't have royalties built into them. So it's not zero sum though. It's every time someone does a trade, 2% of that trade is taken in the fees here from this first tweet we looked at, and that's returned to the stakers. So basically, all these wash traders have worked out that it's more value to get the actual rewards in the LOOKS token than it is in the cost of lost wrapped ETH in the transaction. So this is going to continue while there's an economic incentive for them, and particularly in the first 30 days, because that's when the issuance and the rewards are the highest. So this could change. So what we really want to see is more organic volumes. So this is the daily users. It's a lot lower, but it's probably this one here. The daily transactions, you sort of want to see there's not many actual transactions, but there's ridiculous dollar volume because this is in dollars, and that's because of the wash trading. So we want to see this hopefully over time slowly climb up, and also that one yet with the daily active users, and then also the transaction volume. You want to see that slowly increase over time, and if that's happening, then the protocol's it's looking good long term. So that's super important. So I think for me, it's really a matter of will this protocol actually succeed in winning over users? And there's a lot of early signs to show that it should get some sort of market share off OpenSea and hopefully be able to sustain it. So who knows where that will end up, but that's going to be fascinating to see. Yeah. Again, the price chart's looking pretty darn good. We're only 3 days in, but it's slowly grinding higher, which is excellent. It's still not that tradable yet. It is on FTX. They haven't updated this, but it's on a couple of good exchanges already. I'm sort of hoping Binance will pick it up as well, and you'll get even more liquidity then flow into this. So back to a few of the other tweets. So here's Dingaling talking about the wash trading, and he goes on to explain that he thinks it's actually a pretty healthy thing, and the fact that 2% of all that wash trading is going back to stakers is an early reward for them. So that's quite cool. But I worry what would happen once all that wash trading goes away. I kind of hope that the organic volume can start to pick up. It's not going to completely replace the volumes that the wash trading's doing, overnight, because it's so extreme. There's another good tweet from Moon Overlord. He's basically doxing himself here to say that he got in on the private sale. So, and why he thinks it's got some legs, of course, he's got a vested interest, so he's going to pump it up. But that's part of why I think this has a good chance of working, because some of the big players in the space are going to be behind it because they have ownership of it. And so does everybody else who uses the platform. So that could be a bullish catalyst over time. Actually looking at the contract, again, we can see that there's some big players here that have that vested interest over time, and then there's obviously a lot of other undoxed wallets here as well. What I don't know is where the funds raised from this, because I think it was about 1,400 odd ETH that was put in. I don't know where those funds went, whether that went to the team building the protocol or if it goes into the treasury of the protocol. So I'm trying to get that answered in the Discord, but this is just a quick look at the docs and the tokenomics. So it's pretty darn good tokenomics compared to a lot of other things that I've seen. 75% is going to the community. So we've had a 12% airdrop, which is 73% claimed. And there's staking rewards in inflation of new tokens or more LOOKS tokens going to the people at stake. So that's resulting in a pretty high APY. But then you've also got 44% in trading incentives, and that's what the wash traders are going after at the moment. And anyone who actually trades on the platform on an NFT project that is listed as eligible for rewards gets access to that. So I think the threshold is that basically any project that has over 1,000 ETH volume already becomes eligible for the trading rewards. So that's interesting. There's the strategic sales. So these guys have those tokens, and predominantly have just about all of them have staked them and are getting huge amounts of daily ETH rewards. And hopefully they just don't have any intentions to sell their tokens in 3 months' time, because it is generating such a ridiculous cash flow for them. The other thing to mention is that because you're paid out in wrapped ETH as a percentage of the volume rewards, NFT collectors and flippers are going to be, I'm thinking, going to be inclined to reinvest their wrapped ETH back into NFTs on the platform. So there could be a bit of a flywheel, positive feedback loop effect there. So if I just bring up the platform itself, so you can see the staking rewards in my own wallet here. In just 3 days, I've gotten almost $500 worth of ETH paid out, which is kind of nuts. And I've also accrued, 230 odd looks. So it does pay to be a staker, especially in this first month. And really the proof's in the pudding how long that this can carry on. So if we hover over this, we can see, about half of it is in the volume rewards. And the other half is the inflation, incentivizing people to stake when we go back to here. So yeah, about half of it's coming out of this and half of it's coming out of that. And as we go further down, we can see the schedule. And so you can see it's a bit hard to see on this small one, but in that first 30 days, which is what we're looking at here, you can see that the curve's the most steepest before it starts to sort of taper off a little bit by, a couple of months in, 3 months in, and then it's, slowly tapering off over 720 days. And that shows you the actual release schedule. So I think the tokenomics are pretty good, and they are encouraging, that grassroots community aspect of it. So the other thing I wanted to mention about the platform itself, because I don't want to make it look like that this isn't without its set of issues. There's a few really disappointing aspects of it. Admittedly only 3 days in, but I'm really shocked that they launched this with such glaring problems, to be honest. So, for instance, looking at the Bored Ape Yacht Club here, you can see it's verified, it's eligible for trading rewards, and there's some issues filtering through the UI that aren't great. So if you don't have this ticked, it just shows you everything that's available. And as you can see right now, it's taking quite some time to load. Not sure if that's my own internet. There we go. So it's a bit misleading. None of these are listed on their platform. That one is. You can see it's got a price set. But if I toggle that, it doesn't really improve the UI much. So, there's unlisted ones right next to listed ones, and I cannot filter on the price. So I'm amazed that they would launch an NFT platform where you can't even filter by price. That's amateur hour, if you ask me. So that's not a great first impression, especially when you're trying to vampire attack another platform that's, very well established. So they really need to get the UI stuff sorted, I think, in these first few days. That's critical, if you ask me. There's a few other little issues, but to be honest, if you've got patience, I'm sure they're working hard on them. And I'm sure they've been slammed with their, massive workload launching this protocol, but it's basic stuff like this you've got to get right. Otherwise, people, won't switch even though you've got incentives for them to. So clicking on this here, it's taking a while to load. Not sure if it's, their servers. There we go. Their servers are starting to crash already. So it does look like that they're struggling keeping up with the volume, which I guess you could say is positive in one way, because if they can start to fix that, people will get interested. There is a few aspects to this though that I think are excellent features that they've managed to get working from day one. I'm not sure I'm going to be easily able to show you, given that the site's not working particularly well. Here's an example of the floor trading again. You can see, how much is going through this. especially these projects like Meebits and Loot. I'm not sure about Terraforms, but these guys don't charge royalties, so there's no royalty going back to the the Meebits creators. They're only paying the 2% fee for using the platform, so they're incentivized to do the wash trading. Hopefully this works. But one of the features that they've got is a collections bid. So basically you can put in a pretty well a unilateral floor bid on an entire collection. So the floor here is 3.89 ETH. Say I wanted to sort of snipe the floor rather than, sweep the floor, but just get one at the floor price. I could, as an individual user, come in and set the floor. So I could put a standing offer at, say, 3 ETH on the entire collection. It only takes one person in that collection to meet that price, and then you'll get whatever one that they're willing to sell you. So that's really cool, rather than getting all these floor bots that you get through OpenSea. It means a standard user can come in with a floor bid, and the floor is going to be more natural and organic in that sense. So that's good. Helps support prices, helps provide liquidity for those who are trying to exit. And it gives people a chance to, get something at a discount relative to the others. So that's a super cool feature. The other feature that might be a bit hard to show is that when you buy something, you can pay in wrapped ETH or native ETH, naked ETH, or a combination of them both. So that's a really nice UI thing. I think with OpenSea, you have to wrap all of your ETH first to be able to buy. So that's another really good feature. The other thing that they've got going for them is the fact that OpenSea have its own set of issues. To be honest, I feel like they treat their users with contempt and just gouge them for money and don't give much back. I don't see that they have much of a moat at this point in time. They've got a lot of VC backing behind them, so now that they've got a serious competitor, they might be able to compete, or be forced to compete, I should say, and deliver. I have heard that suddenly they've sprung to life and started to verify projects that have been waiting for months to get on their platform. But this is just an example of, I would say, some of the bad acting that OpenSea has done. They've delisted projects, and I was part of this project, so I saw it go down in real time in their Discord, and they were just getting, basically not getting any feedback for days, and this just killed this project pretty much dead in its tracks, simply because it had the word DAO in its name. Now, that they were saying, it broke terms of service because it had some financialization aspects to it. But honestly, pretty much any NFT project with a roadmap would fall under the same category. So it just goes to show they can pick and choose and do whatever they want. And that's not really what decentralization is about. It goes against the ethos of crypto and Web3. So I've been saying for months I can't wait for OpenSea to get disrupted, because they deserve everything they get, if you ask me. They've been caught out insider trading. This Nate character who worked for OpenSea did something really stupid. He did some insider trading, but then, of course, funneled his profits straight back into his doxed wallet and got caught out for it. So, I'm not trying to say that that's symbolic of the whole OpenSea team, but that's just, it's not a good look. I'm sure this sort of stuff happens everywhere, but, the fact that they got caught out just goes to show you that you've got to be careful with what you're dealing with. And the fact that they're selling out to VCs and probably going to do a seed raise and not reward any of their users, I think they deserve to be disrupted perfectly. So let's see if Looks Rare can continue gaining traction. That's all I've really got to say on it. So if you're one of the users that hasn't logged in and claimed your airdrop, you've got about maybe 6 days or so left. And even at the lower end of the airdrop, because the price has gone up, it's probably worth claiming, provided you can time the ridiculous gas fees right now. So the one other aspect of Looks that I haven't mentioned is people who use, I think it's a Trezor hardware wallet, at the moment are unable to claim their airdrop. So there'll be probably some big bags here yet to claim. So whether they dump or stake, who knows? But just keep that in mind. There could still be some sell pressure there. I know that they're working, I think it was with Trezor, unless it was Ledger. I can't remember which hardware wallet it was. But the issue was actually with the wallet provider itself, not with Looks. So the other thing I'd mention is apparently Looks has been really good at engaging with NFT projects, getting them verified, onboarding them, all of that. So I've heard good feedback at that grassroots level as well. But Anyway, guys, that's my take on it. I hope that was helpful. Thanks for watching.